Electronic Arts agreed to a $55 billion deal to go private, a move that could mark the largest leveraged buyout in history. For more, we'll bring in Jason Bazinet, the managing director over at Citi. Jason, always good to see you, my friends. All right, so EA going private, $55 billion deal. Saudi private investment fund, Silver Lake Affinity Partners. I guess my first question, Jason, I'm curious what you think they could do privately. What financial and strategic moves can they make, Jason, privately that maybe they would have had a tougher time doing publicly if they were still having to talk to you every quarter, Jason?
Well, I don't know. This transaction to me is a little bit of a head scratcher in that it wasn't like EA was unloved. It wasn't like EA was mismanaged. It wasn't like EA didn't have, sort of well understood catalysts. So it's a little bit of a head scratcher. I mean, it's a great asset, but if you ask me to tick off all the things that EA was constrained from doing as a public company that could now do, I don't think the list is very long. They had pretty wide berth.
How do you think about, Jason, Saudi Arabia's role here? I'm just trying to think through, you say it's a head scratcher. They've been making all kinds of moves, have they not, in the gaming industry?
Well, they have. I mean, Saudi, has wanted to get big in a lot of different areas in sports, with Live Golf. And so they want to definitely put the country on the map. They've been willing to spend money in other areas. I'm not saying that this is a bad area. It's just, when we ran our the IRRs for the money that was deployed here, if you use the consensus numbers, which weren't crazy, it spit back something like a low to mid single digit IRR. This just doesn't strike me as the most compelling use of capital. If they would have went and, made an offer for EA earlier this year when they stubbed their toe on FC and the stock was $125 a share and the buy side was very angst-ridden about the future of EA and the durability of FC, that you could understand. But things were going quite well for EA. And so I just don't see a super compelling IRR. Maybe there's strategic reasons that the Saudis have for why they want to buy this asset, but on the financial merits, it's a head scratcher.
All right, so strategically a head scratcher. What are your thoughts on valuation for this deal, Jason? Was that a head scratcher? I did see some analysts saying it was roughly in line, they say, with the multiple paid by Microsoft for Activision Blizzard.
Yeah, that's true. If I went back over the last 7 years, this is about a 20% premium relative to what EA is traded at in the market. So it's not so much, it's just not like a deal. It's just it's sort of paying a premium off of a very fair public price is what I would say. And so what are they going to do that's different? I mean, look, if my IR calculations are wrong, I don't think it's going to be the multiple that they come back out at if they come back in the public markets. Where I'm probably going to be wrong is if the consensus estimates are wrong. And why could the consensus estimates be wrong? EA has really been sort of a marquee video game company in the sports genre. They have never really cracked the code outside of sports. This Battlefield 6 reboot that they're doing October 10th, about 10 days from now, expectations aren't dour, they're not exorbitant, but the company I know is very focused on turning this into not just a video game that sells units, but sort of leaning into the live services and recurring spend inside the game, where really Call of Duty has been sort of the standout, and EA's done quite well with what they call live services spending inside its sports titles. So maybe we all just have mismodeled this, and this is going to be the next Call of Duty in the first-person shooter genre. That's entirely possible. But the irony of the timing of this bid is to put it in today, or yesterday, I guess it was today, the street's going to get a look at how many Battlefield 6 units come out. And if those orders fly off the shelf 10 days from now, the buy side's going to demand a higher premium. And so you sort of scratch your head and say, like, why did you put this offer in now? Could you have done it 6 months ago when we would have never known what Battlefield 6 was? Maybe that would have been smarter. It's just very strange timing.
What's the probability you would assign, Jason, to a competitive bid emerging?
I think it's pretty low. I mean, I would say when Microsoft went and bought Activision, there was a school of thought that maybe every cloud provider would go out and buy video games so they could offer consumers sort of a cloud subscription service, so people could junk their PlayStations and Xboxes and just buy a monthly recurring subscription to get their compute. And the thought is that you would be more apt to sell more of those if you could also give the consumer a library of video game titles to play along with their subscription for the compute power. But I think all of the big cloud providers now are so much more focused on AI, and even Microsoft hasn't really launched a cloud gaming service that I think that's pretty unlikely. So I'm going to guess that there's not going to be a rival bid for this.
Jason, great to see you as always. Thank you, sir.
Yeah, absolutely. Thank you.
Electronic Arts is going private. The video game company agreeing to be acquired by PIF, Silver Lake, and Affinity Partners in an all-cash deal worth $55 billion. Joining me now, Andrew Marok, Raymond James analyst, as well as Michael Pachter, Wedbush Securities Managing Director for Strategic Planning. Guys, thanks for being here. I want to start sort of with the basics here. The premium that is being paid in this deal for EA, 25%. Andrew, I'll go to you. Is that premium too high? What do you think?
I think now that we've had some clarity and the ability to run some numbers on this one, the price paid actually does appear fair, given some precedent in things like the Microsoft and Activision Blizzard transaction, which commenced in 2022 and finished in 23. Looking at things like the trading multiples between those two companies, somewhat similar in terms of trading dynamics. EA a little bit more consistent, Activision a little bit more hit-driven. But when you're talking about the two biggest scaled, formerly independent publishers in the U.S., you know, the trading multiples, the LBO models, the implied value all seems to make sense.
Michael, do you think anybody's going to come in and bid for this thing?
Zero chance of that. Yeah, I mean, unless it was a management buyout, but obviously management's part of this deal. No, nobody's got that much money. Andrew's right that the premium is reasonable, but it's not cheap. So it's not like they're offering $100 billion and somebody will come in at 150. This is rich. You need to make, at least $2-3 billion to justify a U.S. Treasury kind of multiple. So clearly the Saudis have some plans to expand the portfolio. I think the Saudis are looking forward 50 years, not 5, and are thinking about connected TV games. They're thinking about how EA just absolutely sucks at mobile, and they have two of the best mobile companies already in their portfolio with Niantic and Scopely. Brand extension into mobile, EA is going about it the wrong way, so I think the Saudis can fix that. I'm not sure they can fix it while they keep Andrew Wilson in place, but perhaps eventually he retires at 50 and they put somebody in there who really tries to exploit the portfolio.
Interesting. And for those who are not familiar, PIF, which we referred to earlier, is indeed Saudi Arabia's public investment fund. So that's who Michael's talking about there. Andrew, what do you think? What kind of changes now need to happen? I mean, EA, has obviously been struggling a little bit. They came out with those disappointing net bookings a couple of months ago. So what needs to change under this new structure?
It's actually interesting. We've written about this, that some of the things that we thought needed to change, it looked like they were starting to change. You had some evidence of EA kind of centering the player's voice, I think, a little bit more in things like the turnaround of EAFC 25, where they really honed in on the core competitive player and what their specific concerns with the game were. And kind of most obviously in the Battlefield 6 development process, where they had the Battlefield Labs testing environment, which was kind of an ongoing iterative feedback process between the developers and the players. I think Michael made some great points on things like the mobile business, which EA has great IP that they've never been able to exploit on the platform, and certain launch issues around non-sports titles especially certainly need to, I think, can be cleared up. But overall, I think they've done a decent job at some of their bread and butter, which are things like the sports games, and now starting to listen to the player a bit more.
Guys, taking a step back here, some of what you talked about are sort of EA specific, but I'm looking at an industry now in the U.S. that is only going to have one independent, publicly traded video game publisher, right, in the form of Take-Two. Like, Michael, what is it about this business that we've seen this consolidation and, these changes where you don't have that independent ownership anymore?
I think it's two things. I think investors have given up on the space and have concluded, I believe, wrongly that it's not growing. And the truth is that mobile's still growing, maybe single digit, but 6, 7, 8% on a $150 billion base. Console PC maybe not growing as much, and investors don't understand that connected TV is coming. I think that the big public companies have kind of proven that they don't understand mobile. So Activision bought it when they bought King, and Take-Two bought it when they bought Zynga. EA made 3 bad acquisitions. They bought Glue and this Golf Clash game, and I forgot Codemasters. They're just terrible. So I think EA is being put out of its misery. But big corporate and big investors are in a position to take the risk that retail and institutional investors are not. So we're seeing consolidation because the guys with a vision for where the industry is going have the money. And retail investors, unfortunately, have to rely on guys like Andrew and me to tell them what to do, and they stopped listening years ago.
So, Andrew, what do you do? I mean, do you buy Take-Two because it's the only one left?
Take-Two and Roblox are 2 companies that we get a lot of investor interest on. Obviously, Roblox not a publisher or a content owner in the same way that EA or Take-Two were, but there are still interesting stories to be told in the industry. I think Roblox particularly taking a unique approach to how they're choosing to crack the nut of gaming engagement. And of course, Take-Two will be interesting to investors into and through likely the release of Grand Theft Auto 6 in May 2026, which is likely going to be by some distance the biggest launch in video gaming history. So there's less out there, but I think there's still enough to be interesting here in the short term.
And Michael, is there also a case to be made that you buy the bigger conglomerates? That do you buy a Microsoft for Activision? Do you buy a Sony? How should people be thinking about that?
Sony for sure not. Sony's a terrible company,
Okay.
and they actually are blowing it in the games business. Look, games are moving to connected TV. So think about all the participants that are going to deliver games the way we get movies via Netflix. And forget the subscription model. Just think about iOS becoming on your TV. So free-to-play games on your TV. Who's going to deliver that? Cloud providers, AI. Anybody who's investing in making that happen is where you want to be. As far as remaining publishers who invest in, full disclosure, I own 500,000 shares of Playtika. And I didn't buy it by accident. It is trading at about a 4.5 multiple. If it gets an EA multiple, I'm going to make several $1 million. I think that's the one, and that's where I put my money where my mouth is. It's a great company. They are big in mobile, and they're actually beginning to grow again and deliver lots of profit. So that's my favorite, and I'm talking my book.
I got to ask you, Michael, when did you buy that one?
Between July and now. I've been nibbling at the lows, and I love that thing. And it pays an 11% dividend, so you get paid while you wait. I think this thing is a 5-bagger. I wouldn't have put that much of my personal wealth in, but what the hell? I'm a risk taker, so I suggest that your viewers do the same.
Well, the stock so far has not done well, but as you say, if it is at the bottom, I guess it's a good bet. We'll talk more about it another time. Andrew, Michael, great to see you guys as always. Really appreciate it.
Thank you.
Pleasure.